What is going on, everyone? It has been a crazy morning for you all. It has definitely been one for myself. Newsreel after newsreel after newsreel. But my goodness, today's a great day for the portfolio. We had the biggest news yet released this morning. Nebius is investing $2 billion. Sorry, NVIDIA is investing $2 billion into Nebius. And there is about 5 gigawatts capacity that's going to be specifically utilizing NVIDIA AI infrastructure by 2030. This is definitely great news to see because it comes after NVIDIA went from investing or promising to invest $100 billion into OpenAI to reducing it down to something like $30 billion. And then $2 billion on Nebius. Now, OpenAI obviously is a much bigger bet, but OpenAI is an $800 billion company. Nebius isn't even close to that amount, and they're already investing a lot of capital into the company. So very good news to see what is going on. Everyone, how are you? Yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, madam. Yes, madam. How are you? Oh, my goodness. I forgot to bring in my microphone. I got this new microphone thing over here. I apologize. Yeah, no, the audio was not good because your boy did not bring over the microphone. So it must be a lot better now. Man, that was a terrible way to start the stream, but here we are again today. The audio must be a lot better now. Yeah, it's definitely a lot better now. My bad. Man, super exciting morning. Super exciting morning. Let's bring on the big charge. We're going to talk about a couple more things today. We're going to keep it short and tight. We're going to talk about IREN mines and escalation that's been happening, continuing to happen this morning. We're going to talk about more software FUD. Like the FUD has not stopped. A lot of these software stocks are down pretty big today. And it's pretty insane because like the terrorizing on software just does not end. Let's bring up the charts over here, man. Woo. Pretty crazy day in the markets. We have the Qs down about 20 basis points. Oh, it looks like it's a lot lower than when I looked at it about an hour ago. We do have, let's see if Nebius is still up. Man, that is a big move on Nebius. So SOX is up about 1%. IGV is down about 0.5%. But yeah, the Nebster is up almost 16% today. This thing was up like almost 20% earlier. Wild move, dude. Wild move. This has been a massive consolidation of Nebius for quite some time. And it looks like we are breaking out here. It'll be nice to see some fall through on here. We get to see IREN is up 9% on the base of that deal. It just shows NVIDIA's confidence in a lot of these neo clouds that are out there. Cypher is up 43 basis points. Applied Digital is up about 4%. TeraWolf is up about 7%. CRWV is up about 7%. 9% actually, bouncing off the lows over there. But Nebius, just the massive outperformance compared to all of the neo clouds and BTC miners out there, ex-BTC miners. Man, it has been a wild ride, just the volatility up and down, up and down, up and down. So we do need to see a breakout here to the upside in order to see continued momentum here. But let's take a look at the press release that Nebius did release. Also, NVIDIA also released it on their website. I will pull it up over here for you guys, and we're going to take a look at this a little bit closer together. So, NVIDIA and Nebius partnered to scale full stack AI cloud. We already know that Nebius is not 100% full stack, but the new data centers they are building are full stack. They own the land, they own the building, all the equipment, everything. Deep engineering collaboration on AI factories powering inference and agentic AI enables Nebius to deploy more than 5 gigawatts of NVIDIA systems by the end of 2030. We had less than 4 gigawatts promised. That was actually planned capacity during the last earnings. Now they bumped that up to 5 gigawatts capacity of just NVIDIA systems. So there could be more data centers beyond this if it's not just NVIDIA, but definitely 5 gigawatts of NVIDIA systems by the end of 2030. NVIDIA will invest $2 billion in Nebius, reflecting NVIDIA's confidence in Nebius's business and unique depth of engineering expertise across the full technology AI stack. Nebius has been around for decades. It was known as Yandex before they got based in the Netherlands and before they got listed in NASDAQ. They sold all the Russian assets. They were the Google of Russia, and they had to sell all those assets in order to be listed on the NASDAQ. And they have parted ways with that. And now they are a full-fledged company being backed by NVIDIA with $2 billion. To help meet rapidly growing global demand for high-performance compute, the partnership deepens Nebius and NVIDIA's relationship across the full AI technology. How many times am I going to say full AI technology stack? I mean, you can't even really hear enough of that. The thing is up like 16% today. From AI factory architecture to produce software, enabling Nebius to accelerate the build out of its industry-leading full stack again, AI cloud platform. This partnership upon Nebius's ongoing deployment of NVIDIA infrastructure across its global platform includes multi-gigawatt scale AI factories in U.S., the U.S., not Israel, not Europe, in the U.S. Inference, AI infrastructure deployment, fleet management, AI factory design and support, NVIDIA's accelerated computing program. As Jensen Huang said many times, AI is another inflection point, agentic AI driving incredible compute demand and accelerating AI infrastructure build out, said Jensen Huang, founder and CEO of NVIDIA. Nebius is building an AI cloud designed for agentic era, fully integrated from silicon to software and powered by NVIDIA's next generation accelerated compute. Together, we are scaling the cloud to meet the surging global demand for intelligence. Now, a quote from Arkady Volaz, CEO of Nebius, also CEO of Yandex when they're in Russia. Nebius has been built for AI since day one, not adapted from general purpose compute cloud, but designed for what developers actually need. Now with NVIDIA, we are extending that throughout the stack, from gigawatt scale AI factories to inference and software, as we build one of the first and largest clouds for all AI builders everywhere. The next Amazon AWS. Let's go. Let's go. Up 16% today, man. That is a monster move. What's going on with TTD down big? Come on, man. We're talking about Nebius. We're not talking about TTD. Let's go, man. Let's go. Stay on topic. Let's go. All right. So there's obviously a lot more to this than's behind the curtain here. But let's go back to exactly what's been happening over here with the whole NeoCloud sector. We had the debt issues that came up with Oracle, with the CDS spreads widening, meaning that debt just became a lot more risky for Oracle over the last 6 months. We had CRWV basically get hit with that because they were promising a lot of compute as well, and their CDS spreads did widen. And this reflected upon the entire NeoCloud and miner sector. It affected IREN, it affected Cypher, Applied Digital, TeraWolf, all these companies, and including Nebius. Nebius went all the way down to sub $70 after IREN reported their earnings last quarter, and IREN dipped below $30. And then on top of that, just last week, you saw the news that IREN was raising $6 billion for dilution. Wasn't all at once. Things got a little bit out of hand there with that announcement, but definitely did affect the entire sector, but not as much as Nebius. Nebius is getting a $2 billion investment from NVIDIA. And now instead of having just a few gigawatts of capacity at scale, it's now at least 5 gigawatts capacity of just NVIDIA-based systems. Guys, this is big. This is seriously a big move for the entire sector and does exuberate a lot of confidence. These hyperscalers are pressing their bets with these NeoClouds and miners because they cannot build it on their own. So they need the help of these other companies to accelerate the AI infrastructure build out for, of course, the agentic AI era. What's that word? What are those set of words that they constantly say over and over again? The AI, agentic AI infrastructure stack, AI, agentic, whatever it is. This compute is obviously needed, and it's needed very quickly at an accelerated pace. And that warrants a $2 billion from NVIDIA. GTC is going on next week, which is basically NVIDIA's hosted event where Jensen Huang is going to have his keynote there. And lots of companies that are involved in this entire stack, whether it's a software stack, whether it's the cloud stack, whether it's the infrastructure stack, or whether it's even the land stack, energy stack, whatever it is, they're all going to be there. with Jensen Huang basically giving his keynote, talking about hundreds of companies out there. But the one company he's always talked about many times and has backed on before in the past, before this $2 billion investment, was Nebius, and it was also CRWV. But now we're seeing a little bit more favorable toward CRWV as they did get that additional investment. Now, the question begs to ask, how come he didn't give it to CRWV? Why didn't NVIDIA give it to CRWV? Is it because there's risk with CRWV, or why didn't he give it to IREN? Why didn't he give it to Cypher or any of the other companies? He's putting his money where his mouth is, all right? Maybe he might give it to CRWV later on, but as we know right now, he had to reduce his bet on OpenAI and therefore increase his bet on Nebius. They already did own stake in Nebius, but this just further increases the bet that Jensen Huang is putting on Nebius, which really shows the confidence, especially the fact that this news release came out even after Nebius was trading near $100. And now it's up about 16% today, trading in the 100 teens, which it hasn't since last November. So we're seeing a lot of momentum come back in the space while the market is just chopping away left and right. So definitely going to be more things. Definitely an exciting day for me. Am I selling any Nebius? Absolutely not. I'm not selling any Nebius. I'm going to be holding on to this and going to continue holding on to it. I don't own any more IREN. I already told you guys I sold it at $45. It's trading less, so I can easily jump back in IREN. But honestly, if I would reinvest more into the sector, I would just press my bet on Nebius. I don't think I would look at anything else, which is the way it has been since a year ago when I started investing in Nebius at $25. And since then, it is more than 4 times up. And I'm still going to hold on to it. I still think it's very early in the story if this agentic AI reality is actually come to fruition, especially when AGI comes into play. When you have artificial general intelligence, this is like baby numbers for the amount of compute that needs to be built out at scale. When you start bringing in artificial general intelligence, you're going to need a lot more infrastructure out there and also a lot more efficiency. And this is the reason why you're seeing semiconductors lead the market. We are in the build out phase still. I thought we would be in the software phase 2 by now, but it doesn't look like the market agrees. The market is selling off software stocks and buying more semiconductors. At least that's what I see. If I look over here on the charts here, dude, like Qs are down today. Bitcoin is up 1%. I'm kind of surprised about that one. RSP is down today, but semiconductors are up. Semiconductors are up 1% today. The market is telling you that it's betting on semiconductors. Look at all these semiconductor stocks over here. Stera Labs is up 7%. Marvell, well, I don't know why Marvell is down 3%. That sucks. Navitas is up 23%. There must have been some Navitas news over here, actually. Interesting. Hold on a second. I just want to put this on here so people can watch the show on YouTube. If you're on Twitter, guys, tune on to the YouTube channel. Show us some love over here because we do some crazy stuff over here. Also, additional videos on the WOOF channel. So go ahead and check that out. If you're on my channel, kudos to you as well. But yeah, so there must be some news that's on Navitas because Navitas is up 20%. Let's see here. I don't see anything. Navitas is a partner of NVIDIA. There has to have been some news. Why? All right, so AHR is flat today. So is it just like a technical thing? Yeah, I don't see any. Oh, here we go. I think I see it over here. Let me go ahead and share my screen while it's up. I mean, I think this is the news, right? Navitide adds topside cooled QD pack and low profile to this is the reason why it's up today. 2.5 times volume. I guess, Navitas is a very volatile stock. So, we got to be pretty careful when we're buying this one. This is not a profitable company, right? So even though Nebius is not a profitable company, they are getting a lot more investments. I mean, if you're holding Navitas or probably a long-term, like long-term for years, it would kind of make sense to DCA over here, but like to go all in on something like this. Navitas is more in power management. This is somewhat of a competitor to On Semiconductor, which I've been invested in for some time. On Semiconductor is down about 1%. Yeah, there's a lot of things that are down today, but We are starting to see a lot of money flow back into semiconductors as well as the neo clouds. Software over here is, I think it's because oil is coming back, right? So I'm just looking at the chart right now, just to get an idea where the markets are at. Yeah, oil is up 5%. The Iran war is not de-escalating as much as people thought that it would be yesterday. In fact, they did interview Trump on Forbes. I'm going to play a little bit of this over here to see what information we can find as far as any commentary that Trump gave on the war. We saw a lot of escalation yesterday, but just to kind of recap what we saw yesterday, probably like throughout the day, we've obviously seen oil spike, and then we did see the potential release of some barrels of oil from the G7. And then that no longer happened. Then Trump started talking about keeping the oil prices down. Like Trump's prerogative is definitely to keep the oil prices down because he does not want $100 plus per barrel of oil, because it's going to have major impact to society. And if you do have that, then you're going to get probably more inflation coming back to the market. And that would press harder against the growth rate of the U.S. And therefore, that might actually tamper some stagflation fears. I don't personally think that's going to happen, but oil prices are back here below $100, and it's definitely Trump's prerogative to keep these tame. He does not want oil prices to be higher. So there was some talk about that in his press release the other day. Also, in addition to that, there were some mines that were supposedly placed in the Strait of Hormuz. And then Trump said that there are no mines. And then he said that there were mines, but they were inactive. And then they destroyed like 100 plus of them. I mean, it's really a lot of back and forth, but you're seeing a lot of escalation when it comes to the war. And it doesn't seem like it's stopping anytime soon. And really, the market's concerned about the Strait of Hormuz. I don't think it has so much of a problem as far as the war goes. It's more concerned about the Strait, because when you're straining the supply of oil across the entire world, as a lot of the oil does pass through that Strait, then you're increasing the demand and you're lowering the supply, or supply is decreasing, the demand still stays afloat, so that increases the price of oil. And if that happens, it affects everything. We've talked about that ad nauseum on the stream, on the podcast a lot lately. But when the mining situation got brought up, you saw a lot of bidding with Kraken Robotics, a lot of the submarine stocks as well. I had Michael Seaken on there. You guys can go ahead and check out the podcast I recorded yesterday with Michael Seaken, Uber Bull for Kraken Robotics. Congratulations to people who are in there. In fact, what's KRKNF? Whoops. I'm just looking at it to see what it's trading at today. It's a little bit laggy on the trading view. Yeah, it's down like 3%. So it gave up some of its gains yesterday. I think it was pretty extended. And we didn't see any follow through with that move. So we'll see what happens there. But still very early in that game. I still need to look at that company. But let's go ahead and take a look at some commentary that Trump said to Forbes during its interview.
They've lost their Navy. They've lost their Air Force. They have no anti-aircraft apparatus at all. They have no radar. Their leaders are gone. And we could do a lot worse to one another. We're leaving certain things that if we take them out, or we could take them out by this afternoon, in fact, within an hour, they literally would never be able to build that country back.
A new report says that the military investigation has found that the United States struck the school in Iran. As Commander-in-Chief, do you take responsibility for that?
That is what?
As Commander-in-Chief, do you...
For what?
For the strike on the school in Iran. A new report says the military investigation has found it was the United States that struck the school.
I don't know about it.
Are you talking to the CEOs of various oil companies, encouraging them to use the Strait of Hormuz?
Yeah, I think they should. I think they should. I think they should use the Strait. In my opinion, look, we took out just about all of their mine ships in one night. We're up to boat number 60. I didn't realize they had that big a Navy. I would say it was big and ineffective. But every one of their ships, just about all of their Navy is gone. It's bottom of the sea.
Mr. President, how do you respond? Mr. President,
have they laid any mines in the Strait of Hormuz?
We don't think so.
Mr. President, is Senator Thune listening to you when you say you want to pass the Save America Act? He says there aren't the votes to do it right now. What's your response?
Well, he's got to be a leader. You know, if he's a leader, he's got to get him. It's the most popular bill I've ever seen put before Congress. And it's voter ID and it's voter You have to be able to be a citizen to vote. It's called citizenship. And we're also adding in no men playing in women's sports, no transgender mutilization of our children, and no mail-in ballots, fake mail-in ballots. We have none of that, except in the case of the military, etc. It is the Save America Act. It's the most popular bill I think I've ever put before Congress.
Can you declare victory in this war if the supreme leader remains the Ayatollah's son?
I don't want to comment on that. I don't want to comment. But I will tell you, I just spoke with various countries, the leaders of various countries. You'll have a list. And they said they've never seen anything like it. We have, and I built it during my first term, and I used it. I didn't realize I was going to use it this much, but we have the greatest military in the world by far. Nobody close.
About a domestic terrorist attack by Iran
We're not invited to the Shield of the Americas. Mexico, Brazil, and Colombia were not invited to the Shield of the Americas. Why was that? And could they come in the future to the event?
I think they were invited. Maybe they didn't come. I think they were. I get along very well with all of them.
In Iraqi parliament, few days, members slogan, day to America, day to Israel. What is your response to them? What is your message for Iraqi government?
What did he say?
Spain, Mr. President.
Oh, Spain? I think they've been very bad. Very bad. Not good at all. We may cut off trade.
And Hezbollah is making danger for the Lebanese, and especially.
Right. I think he said more than a few things over there. Definitely try to talk down the war. He's saying that they're going to be more aggressive with Iran. And then he's saying that the war is on track to end soon. We're getting mixed signals over here, clearly. And I think the market is ingesting that in the way that it actually is. I mean, the markets are still continuing to be choppy. So we will see, guys. DigitalOcean. Oh, what's this? Applied Digital announces $2.15 billion. Doesn't seem to be affecting the stock too much. Yeah, that's interesting. DigitalOcean is up 10% today. I was trying to see the reason why it's up 10%. It's pretty interesting because this is a stock that I know a lot of people are long. This is more in the edge compute. This is actually makes sense. But yeah, DigitalOcean is kind of breaking out here from its little bit of consolidation. OSS is also edge compute as well. And that one is finding a little bit of a bid up over here. But still, the markets are just continuing to be choppy and software continues to be sold off. Cloudflare is in the 211, so good for Cloudflare. But yeah, Team Atlassian is continuing to be weak. Workday is continuing to be weak. Zeta is continuing to be weak. Unfortunately, Zeta is, this is in the software tool belt. GitLab is in the low 20s, which is crazy. I'm surprised. Actually, yeah, that's a new 52-week low over here. I'm surprised no one's acquiring this company. This seems like an acquisition target, how cheap it's trading now. Less than $4 billion. And I think that's less than 4 times forward price to sales because I think they're in the $1 billion range. ServiceNow is down 2%. Thought that one was breaking out. It's not. Salesforce is down 1%. This could just be some consolidation here because see, it's finding some support over here in the 20-day moving average. Let's look at ServiceNow. Yeah, it's finding support in the 21 EMA. It could be consolidating a little bit because it did make a big move to the upside. So a little bit of a pullback before it makes another leg higher. Zeta is doing good. It's finding support off the 200-day moving average. So it's good to see. Adobe is down. Yeah, it just looks like software is just taking a little bit of a pullback, taking a little bit of a breather after that a big move. And IGV is crossing over on the 21 EMA, 90 EMA. That actually looks like a pretty bullish setup right there. So we'll see what happens with that one. VIX is basically flat today. So, that's good to see that volatility isn't rising too rapidly. But it is interesting to see that the RSP, the equal weight, has taken a little bit of a hit lately, while tech kind of recovers a little bit. But semiconductors basically led the market back up. But we do want to see this flip happen back here. Otherwise, it's still choppy markets. Still choppy markets. What? No market close today. All right, we'll see, guys. We'll see. We'll see, because I do got some things I got to do over here. I got some things I got to do at home. Wow, 174 of you, 129 of you on my channel, 45 of you in the Wolf Financial channel. Again, go ahead and check out Wolf Financial. Lots of videos on there, lots of stuff here on my channel. Kudos to you as well. Welcome to the solid report. All right, so there is a bit of a software sell-off. We did have a little bit of a discussion about this on CNBC. I want to play this clip for you as they start to talk about more software spending strategies under scrutiny amid AI disruption. I'll give my thoughts about that one after as well. But let's go ahead and take a look at this clip from CNBC.
Moody's downgrading Salesforce as the company reportedly kicks off a debt sale of up to $25 billion to fund some stock buybacks. Our Deirdre Bosa is watching that in today's Tech Check. This is definitely making the rounds, Dee.
It is. Morning, Carl. So one way to read this deal is that Salesforce is borrowing to buy time and not growth. Now, this would be the largest bond sale in its history, and it's likely a show of confidence from management. But the money is not going towards a new product acquisition or AI infrastructure. That's the stuff that everyone else is spending or borrowing for. Debt-funded buybacks, they work only as long as the underlying business itself justifies the bet. For Salesforce, the poster child of the software sell-off, tripling its debt to prop up the stock price is a gamble that AI disruption fears are overblown. But if management is wrong, the balance sheet could make things worse. Now, to be fair, you can see why management feels confident on the surface. They just beat earnings, revenue over $40 billion, free cash flow. Agentforce, their AI platform, is growing nearly 170% year over year. But you dig a little deeper, and Agentforce is actually still less than 2% of total revenue. The stock is down over the last 5 years. And while other software names like ServiceNow, Datadog, Shopify, while they have bounced this month, Salesforce is flat. So the market is starting to pick favorites in the SaaS sell-off. CRM isn't one of them, at least yet. One more thing that's worth flagging here, Salesforce pays its employees roughly $3.5 billion a year in stock. That dilutes existing shareholders, so a meaningful chunk of every buyback, it's not actually returning capital, it's just offsetting stock-based compensation. Now, investors have spent years telling Mark Benioff to stop doing acquisitions and return capital, so that's what he's doing. And Sarah, I know that you spoke to him. He said the number one great value out there right now, it is CRM, it's Salesforce. But he might be right, but levering up to buy back stock, that is the playbook, very reminiscent of IBM and the old Oracle before AI, not a company that is pioneering a new AI age.
Yeah, I mean, they just feel a lot of conviction about where the stock is right now. And it was interesting, I also, in the interview, asked him about M&A, because all these software valuations, you know, according to him, have gotten so cheap. And he said there are a lot of interesting opportunities out there. It didn't really go beyond that, but said we have a very disciplined approach to M&A because, as you said, he's been pushed by investors, I think, to be really disciplined when it comes to that answer and the use of cash. But it's not like he's the only one borrowing. I mean, Amazon, or a lot of them are tapping the debt markets right now.
Yes. And I'm so glad you bring that up. I didn't have time to get to it in that segment, but that is a key point here. So others like Amazon and Oracle, even Alphabet, they are borrowing, but they're not borrowing for buybacks. They're borrowing to fund growth. Many of them are spending on infrastructure, which will bolster the AI bet. They have sort of a plan, whereas Salesforce and Benioff, they're borrowing to buy back stock. They don't have any better ideas. I know he's been burned by M&A activity.
Yeah, I posted about this one the other day, and I thought it was pretty interesting. The headline is a few days old, but a few days old. Wow, that was yesterday. Good Lord. Yeah, Salesforce is selling $25 billion worth of debt, and part of it's to fund their buybacks. Like, honestly, if you, a lot of people ask, like, why isn't Amazon buying back their stock, or why doesn't Amazon issue a dividend? First of all, if Amazon were to do that, I probably would not be as bullish Amazon as I should be. And the reason why is because, look, if you don't know what you do with your money, that you think that you'll find a better return on capital by buying back your own stock versus reinvesting into different businesses, or maybe reinvesting into certain verticals within your company, or reinvesting into Agentforce, which is Salesforce's all-star AI platform, which Deirdre Bosa did say that that's 2%, less than 2% of the revenue, $800 million. Like, look, if you can't figure out a better way to use your money, versus buying back the stock, the fact you have to issue debt to buy back your stock, you've already reached a level of maturity for your company, like max level maturity. So if Amazon were to say that they want to buy back their stock or start issuing a dividend, that would get me pretty bearish Amazon. Now, why would that get me bearish Amazon? Well, Amazon is spending a lot of money to invest into its AI infrastructure build out because they're the largest hyperscale in the world. They see a lot of growth in that sector, and they're also reinvesting to other businesses as well. Project Kuiper, in addition to Zoox and so on, all these other side businesses or side hustles they're trying to do. There really won't be any reason to buy back their own stock, because if they do buy back their own stock, that's basically them telling the market, we don't know what to do with all this extra money or money that we're going to issue debt for, other than just buy back our stock and hope our stock goes up, right? And they could be confident in their execution, and Salesforce could underperform the SP 500 for quite some time, which would mean that they would have done better buying the SP 500 than buying back their own stock. That's essentially, if you're buying back your own stock, you're essentially saying that I don't see value in investing in anything else other than just buying back my own stock. Salesforce is saying that. And it's not saying that Salesforce is dead or anything. It's just saying that they've reached a level of maturity in their company, growing at about 10%. And a lot of the growth is going to continue to be inorganic. That, look, they're not a growth company disguised as a mega cap. They're no longer that. Amazon is a mega cap disguised as a growth stock, right? Sorry, a growth stock disguised as a mega cap, because Amazon is growing their largest business by about 22%, 24%, and they're continuing to do so. And they also have these other businesses, and they're also expanding to emerging markets as well. And they also have other things that they're doing in terms of advertising and other stuff. There's a lot to do with Amazon. This is the reason why I'm so bullish Amazon, for these very reasons. Salesforce is mostly software, a SaaS platform, and they will still be around. No one's going to get rid of Salesforce. Like, Salesforce will be around for a long time. They're not going anywhere. But I think when you're trying to find certain investments that can boost its return on capital to its shareholders, right now, to them, a $50 billion buyback is the best approach to them. And that is essentially telling the market that they might not be seeing any excessive growth for the near term, or even the long term. The fact that they have to even take out debt to do it versus taking out debt to fund infrastructure, or taking out debt to invest in new ventures or anything like that. They're just buying back their own stock. And for me, that's probably the reason why I'm not buying Salesforce over here, even though they are trading historically cheap. Let's look at the Salesforce chart first. Actually, hold on a second. Let's look at the fiscal AI. Let's take a look at some metrics over here with Salesforce, and we'll come up with the argument and back the argument that Salesforce might not be the best buy in the stock market. And I know a lot of people are bullish Salesforce. Like, it's going to be, if software comes back, Salesforce is going to mean revert. And I've been listening to more than a few podcasts about this one, listening to certain takes that people have with it. Like, what if software goes back up, but what if it doesn't go back up to previous levels where it had its premium for over a decade? The issue here is that software has been trading at a premium valuation for quite some time. And the AI build-out continues to be in semiconductors, or picks and shovels play. So if I go to Salesforce over here, and I go to the financials, they've basically been growing at about 10% for the last couple of years. It doesn't seem like they're going to accelerate past into double-digit growth again. The gross margins have been somewhat flat for the last 10 years over here at around 77%, but they are a software company, so those are very high gross margins. Operating profit, they are heading back closer further into profitability on an operating basis, which is good to see. So their EBIT margins are increasing, expanding, and they could probably expand a little more, maybe 25%. 25% is a good terminal rate for a lot of software companies that are growing at 10%. Sometimes some software companies, especially Meta and stuff, they're at 40% operating margins, but because they're growing a lot faster and they have a lot of verticals, they have a lot of high margin businesses like advertising. Salesforce, on the other hand, doesn't have that. They don't necessarily have that leverage to pull in order to warrant investing in other verticals. So that's why they're buying back their stock. So I wanted to look at their businesses over here. So they do have a lot more growth in Europe as well as Asia Pacific. So they are finding that, but most of their growth is really going to be in the Americas, where they got about $27 billion. Last year, they're at $41 billion. Sales revenue is somewhat slowing down here. Service revenue is probably a much higher margin business for them, because that involves building a lot of stuff for customers. Total subscription revenue at 10%. So we did see a little bit of acceleration here last year. But yeah, I mean, reporting performance obligations, this is good. This is at 14.2%, but this isn't exactly billed to the client yet. So that still does need to take some time to flow into the top line. And then let's take a look at their valuation. I think it's safe to say that we can even look at the forward PE and Salesforce, since they're a lot more mature and a lot more profitable in terms of a company. They're trading at about 14 times PE, which is relatively cheap, probably the cheapest. Yeah, it's the cheapest Salesforce has been for the last 10 years. So people are like pounding the table saying like, this is the best buy in the stock market. The problem is that when you have IGV all the way down here, and let's say IGV comes back to a bit higher. Let's say IGV rallies like 30%. Well, Salesforce is going to rally as well. Salesforce makes up a large part of IGV, so does Microsoft and so on. The thing is that you have a lot of software companies that are growing tremendously faster, not nearly as profitable as Salesforce, and probably not buying back their stock. But more importantly, they're growing in like high double digits, right? So if you have a company like ServiceNow, they're growing like around 20%. They are continuing to expand profitability. You have Rubrik growing at like 50%. They are free cash flow positive, but they are not profitable on the bottom line, but they will eventually get there in the next couple of years. On an adjusted basis, they're expected to be there next year. And then you also have Zeta, which is already profitable on the bottom line. And they're going to be going at 35% next year and then close to 40%. So there are other better plays, in my opinion, if software comes back. Salesforce is probably the least riskiest out of all of them. But I would argue that the amount of risk you need to put on the table for something like a ServiceNow, you have much more upside. But today, unfortunately, the market doesn't agree. The market does not agree that software is going to come back. Software is down 36 basis points on a one-day scale. Semiconductors are up about 1%, and the Qs are still down about 27 basis points. We're continuing to be in this chop. But in the midst of all this chop, semiconductors and picks and shovels are leading the curve right now. It'll probably change at some point, but it hasn't changed today, and it certainly has not changed the last few months. So that's why I continue to position myself in a lot of semiconductors. I did rotate some capital to buy more software, but software is like, excluding AWS, or Amazon, which is not necessarily a software play by any means, but software is probably like less than 20% of my portfolio. And there was a point probably a few years ago where it was like 50+%. And the writing was on the wall that software isn't there yet. And the market came to realization last few months. Now, it could come back and it could be a great long-term play. I agree with you. It could be a long-term play. And it is a long, that's why I bought Rubrik. That's why I bought more. That's why I've been buying Zeta, and that's why I bought ServiceNow, but it's not today. And unfortunately, it could stay that way for some time or come back tomorrow. But the way that things are developing from what the price action is telling you in today's market is that it's not today. So, invest for the future, DCA into software companies. You'll be happy you did maybe like 4 or 5 years from now. But if you really want to catch that tailwind in the market, the tailwind is clearly semiconductors. And I thought maybe the ratio might balance out over here. Like if I look at the SP 500 sectors and I look at the ratio over here, we are seeing a little bit of a pullback. This is probably going to come back up, right? So this doesn't mean that semiconductors are going to go down and software is just going to go up. This just basically means that semiconductors have been outperforming software since a year ago, right? So we had the bottom in April. And since April, semiconductors have been outperforming software for quite some time. So maybe we reached an inflection point, but this looks like over here that this 50 EMA is just resistance. Even if we look on the weekly chart, right, it just continues to be resistance here. So you need a massive mean reversion to be able to see that happen. And look at how good software has been outperforming semiconductors for the last 20 years. Even especially since 2007, when Salesforce started getting bigger, when Microsoft started getting bigger, and all these SaaS companies started coming around, you've had software just outlandishly outperform semiconductors for quite some time. And maybe it could be coming back. Maybe this could be a great setup over here for software for now. But I do believe that I'll be able to position myself correctly once we start to see that confirmation that, hey, software is coming back. I can react pretty fast when it comes to that. I can react in less than a couple of months to rotate a lot of position in my portfolio to capture that move. But I'm going to ride the trend here. The trend is your friend, guys. That's the motto I go by. The trend is your friend. And I didn't buy falling knives. Like I didn't catch ServiceNow under $100. Unfortunately, I wish I did, but I didn't. And I did abide by my rules. Like everyone has to have rules and standards for how they invest in their portfolio or how they trade. And you have to stick to those rules. And if you're going to change them, don't change them day by day. Change them over a period of time after you observe your performance. And for me, I've seen that my performance has been a lot better since I started thinking more like the medium term and maybe like short to medium term, medium to long term scale in terms of outperformance of the market. And I will continue to do so because I've seen that help my investment strategy. And my investment strategy might not be for everyone, but this is just how I work. People might be different, buy and hold for 10 plus years. And this could be generational buys for software companies, right? Not all of them, but certain companies. Yeah, it's historically cheap. So I don't want to say that these stocks are cheap, okay? Because if you say that these stocks are cheap, you're comparing it to the broad markets, and they still do trade relatively expensive for other companies in semiconductors with pretty decent gross margins. Like for example, NVIDIA, okay? Like we don't even have to look at the price to earnings, but even on price to sales perspective, NVIDIA is somewhat expensive. But if you look at how profitable they are today, it does justify that premium that they do have on a price to sales. If you look at ServiceNow, I think that they are going to expand profitability, but they're certainly not going to get to the point of profitability that NVIDIA is at right now. So NVIDIA could be a better buy than ServiceNow here, right? It could be a better buy. Yeah, I mean, I agree with you. It could be a good call for a few years. It depends on how you position your portfolio. So if you are someone who does not want to look at their portfolio every day, is not trying to like outrageously outperform the market year in and year out, then yeah, it could be something, but if you're looking to like really relatively outperform the market on a year to year scale, you need to think about these things, right? So it's not necessarily for everyone. AppLovin has had quite a bounce lately. Actually, let's take a look at the AppLovin chart over here. Oh, it's back in the 460s again. Dude, this thing was like in the 500 just like a couple days ago. Yeah, so this thing had its earnings, and I mean, these numbers are crazy. The numbers they're posting on their earnings. Actually, let me take a look at the fiscal AI over here. Hey guys, keep me posting any news that comes out, because I'm like not good at like keeping up with the news over here while I'm looking at like some market stuff. In fact, that does remind me. Let me look at the news real quick, see if there's anything developing. No, I don't really see anything. I usually look at like whatever's happening in the market. Like if the market is like moving very big, then there's some big news that's out. But if like the market is just flat, like it is right now, then like nothing, there's really nothing that's out there. All right. So AppLovin, let's take a look at their revenues. I mean, this is crazy growth, like 70% growth. They had a slower quarter this quarter, but if you look at their segment KPIs, we really want to look at the software platform revenue. That's interesting. Why was this only 20%? Oh, it's because, yeah, they offloaded one of their businesses, and they basically dropped a lot of revenue over here. The App Store, they sold this business, and they basically gave up a lot of growth. But if you do look at their largest business, which is pretty much all of their revenue, it is their software platform revenue. So I would look at this one right here. It's still growing at 69%. So if we do look at their software platform EBITDA, oh, they don't list it separately. Okay. So let's go ahead and look at their income statement over here, and their operating margins are like 70. Their operating margins are 77 freaking %, guys. Like these are some crazy numbers. These are some crazy numbers. Let's look at the ratios over here, see what they're valued at. So on a price to no, I want to look at EV to EBITDA. They're trading at over here. Yeah, they're trading historically cheaper, other than of course before that. This was before AppLovin like really boomed, when like the ad market started taking off. So like I don't think you're ever going to get these prices again. This is when AppLovin was, I think it was under $100. Yeah, this is when AppLovin was trading at like 37 freaking dollars. Like, is that? Oh no, not 37. Less than $100. And then that's when you had your boom over here. So I'm gonna go ahead and hide the stock price. Yeah, so they're pretty cheap relative to their previous valuations. But it's very difficult to know if, like, hey, is this going to come back here? Is AppLovin going to get back to these valuations over here? I think a lot of it has to do with all of advertising, right? The advertising or ad tech sector isn't getting like the best love, and that's not just advertising sector; it's also marketing tech or martech, advertising tech, and advertising would be like Reddit, AppLovin, TTD. And speaking of TTD, I think someone mentioned earlier that TTD was down again. Yeah, TTD is down like 2%. You got to remember that Jeff Green did buy a lot of stock, $150 million worth of stock. So his conviction is pretty high there. Like, it's a bit different. Like, when a CEO buys $150 million of its stock versus like buybacks, like taking out debt to buy back your stock, it says a little bit different there. The TTD bottom, they might have bought them, guys. Like, that's like massive conviction, like $150 million. What is Jeff Green's net worth? Jeff Green's net worth is $2.2 billion. He basically put almost 10% of his net worth to buy his own stock. Like, that's some serious freaking conviction. I mean, most of his net worth is in the stock, but like that's a lot of conviction right there. Yeah, no, the operating margins are insane. Let's take a look at the AppLovin chart, see what's going on over here. I don't think I'm gonna do the market close, guys. I don't think I have time to do market close, unfortunately. But I'm sure someone will step up to the plate with that one. So if we look at AppLovin, it's coming over here. It's back testing at 21 EMA. I mean, this doesn't look like it's falling off a cliff, guys. It just looks like a little bit of a pullback after a massive run. So since its bottom, AppLovin jumped up like 40%. And then now it pulled back 11%. Like, come on, guys. It's still up 30% from its bottom. Like, that's a big move. Reddit is one that's pretty interesting because Reddit looks like it's finding a floor over here. But I think the hesitation with myself, in addition to the market, is that, like, look, guys, this is like massive chop. Okay. Like, I don't like to be shooting darts in this environment, right? Like, I'll rotate a little bit of stuff. I'll probably, like, buy some shares or something, maybe do like a swing overnight or whatever. But like, I am not like this. This is not a swing trader's environment right now. This is massive chop. Like, look at this. Like, one day you get bullish, you get smacked across the face, and maybe we go down here, maybe we don't, right? You got bullish up here, you got smacked all the way down here. You got bullish over here, got smacked, or you got bearish here, you got what up. Like, this is the definition of chop. And it's starting to not just be in the Qs anymore. This is starting to be in SPY as well. Like, this is starting to turn into some chop. So we were down as much as 5% on the lows on Sunday or Monday morning. And now we're down about 3% from the all-time highs. Like, it's like very difficult to say where this market is going. But perhaps Bitcoin did bottom out a little bit. Bitcoin did base out over here, and it's finding a lot of relative strength. Like, trying to look at the relative strength of certain sectors in the market, it looks like it's a lot of it's in Bitcoin and semiconductors. That's where like a lot of the strength is. If I look at the sectors, it's no longer XLE anymore. Oh, wow. Actually, XLE is up 2%. That would mean that Chevron. Yeah, Chevron's up 2.5%. ExxonMobil is up 2%. EQT is up 2.5%, hitting, wow, new all-time highs for EQT. That's crazy. Yeah, it doesn't appear that the sectors that exuberate strength are not working right now. And look at XLF. It almost made a new low today. It almost, not a 52-week low, but it almost made a new local low today. Thank you, bro, for Mark Close, AMAT MIA. I don't think AMAT's MIA. He's obviously doing some pretty important stuff, but I appreciate you guys being here, if anything. I'm glad you guys are watching the show in lieu of AMAT's absence. I mean, the dude's going to be back. He's always going to be back. He's always going to be killing it. go ahead and check out that Basis Points podcast that he did recently with Steve. That one's pretty cool. I didn't get a chance to watch the Robinhood one, but the other two were really good with Dan Ives and Downtown Josh Brown. So go ahead and check that out in case you haven't checked it out before. But yeah, I mean, the health of the markets, I mean, this is just still trading like near its lows, right? Even healthcare is down. This bounced a little bit because of semiconductors. Staples pulling back. Industrials pulling back. This is the reason why the RSP is down, is because you had the leaders over here. Industrials, staples, utilities, maybe not so much energy, real estate. All the defensives are down actually, and they're down along with the tech, right? So the tech stuff is down as well. HIMS is strong today. Yeah, HIMS is definitely strong today. Probably bottomed in my opinion. Yeah, this looks like this is a bottom. The problem though is that you do have the risk of Novo Nordisk, and that has not recovered. It is not recovered at all, and it's continuing to trade down here. And I think there's some news as far as Novo Nordisk's FDA issues. Actually, let me try to look for a clip over here. See if they got something on CNBC about Novo Nordisk. They probably do. Oh no, that's from like a month ago. All right, I'm going to look for this clip that I did post on Novo Nordisk the other day in regards to the partnership. That partnership is confirmed. They definitely did have partnership. All right, is this the one? Here it is. Okay, so I'm going to go ahead and play this for you guys real quick.
Our products more affordable is to provide more and more access to them. We provide that access via the traditional channels through the PBMs, of course, as usual, through increasing number of e-health providers and our own Nova Health pharmacy. So getting HIMS and HERS on board as a major e-health player, of course, gives us hope that access will further increase, and this will be very good for patients as well as the two companies in between this agreement. Our aim is by making our products more.
What's your framework for how the GLP-1?
Yeah, so we did have that commentary from Novo Nordisk. He obviously is bullish on the partnership. I think Novo Nordisk needs this partnership. They're in trouble. They're definitely in trouble as far as distribution goes. They do distribute their Wegovy shots and also the new pill that they did release. They did release that across other pharma platforms. But I do think they need more distribution channels, and they probably need this partnership more than HIMS and HERS needs it. Obviously, this was an issue for HIMS for quite some time, and it was mostly a dispute that was happening as far as the knockoff Wegovy GLP that HIMS did release and then take off the markets through the FDA scrutiny. But I do think that Novo Nordisk needs this partnership, and it has to stay through. And it's actually pretty interesting because this now puts Andrew Dotum, CEO of HIMS, at the higher ground over here, where he's no longer in a corner defending himself. Now he's from a position of strength. And you can see that through the stock as well. Stock is well off its lows. I think it's up about like 60% from its lows. And in my opinion, I think this thing is going to like 30, 32 bucks, maybe even $40 to the upside when things swing the other way. So you have the pendulum swinging back and forth in the stock market, and it swung the other way when HIMS was at 15 bucks, and now it's swinging back the other way, and it probably still has room to go up. I'm probably not going to jump in this trade because it's not necessarily anything that it's a lot of volatility for sure, and there's a lot of uncertainty still, and it probably will come back. But I think the time to capture this trade was probably in the 15s, and you had more than a few weeks to capture this trade. And of course, people are getting excited now after it already made its move. But now I feel like you might need a little bit of consolidation still before another leg higher. The thing just made a 40% move to the upside. So there still needs to be some consolidation there before it makes its next leg up. So we will continue to take a look at that one. This was a clip from Andrew Dotum. He had an interview. This was last November. This was not recently. This was in November 13, where he was discussing his push to basically take over the market. So this was actually around the time when HIMS was trading around Yeah, it was trading like around $40. This came after the short squeeze tweet that he did release. So let's go ahead and listen to what he said here in this November interview.
One market shapes out.
Yeah, it's a crazy market. You know, it's like one of the most important categories probably in the next few years. I think you're going to have more and more treatments on the market very quickly, right? You've got Metsera deal with Pfizer and Novo that have been taking place, you know, back and forth. You've got Kylera that just raised a huge growth fund that's got a GLP, GIP that is at par or possibly superior to tirzepatide. You've got Viking coming out probably in 29 or 30. You then have Wegovy and Ozempic going generic sometime in 2030 or 31, which is going to bring the price down to, you know, it costs, you know, it could probably cost $10 to make one of those vials, right? So I think in the next few years, the landscape is going to be incredibly competitive. I think the prices are going to come down dramatically. This is something we're very excited by. When we first started putting these treatments out, the prices were $1,500 a month, and now they're down to about $150. I would guess in 3 years from now, you can be buying, you know, one of the best treatments for $50 a month.
Yeah, so he's definitely bullish on the whole pharma stuff. It's actually pretty interesting. He mentioned Vikings Therapeutics there, and of course the Metsera acquisition from Pfizer, and that was kind of like an inflection point for Vikings Therapeutics. If you guys are following me, I was bullish Vikings Therapeutics, gotten around $25 with spreads, and then I started scaling out of it in like the high 30s. So it looks like it's here at about $36, so it could be heading over there. But I do think that if Vikings Therapeutics becomes a target, it's probably going to go to $60. Why am I not involved in this trade? Well, the trending themes in the market right now are semiconductors and picks and shovels. So I'm going to focus on there for a little bit. Also drones, drone battery technology. I'm in Ampex as well. Pretty crazy because Ampex it's almost a double for me, which is wild to think because I thought I was late, but I guess I wasn't. That's more of a drone battery technology company, and they're growing like 200%, which is insane. Yeah, they trade pretty expensive on a price to sales perspective. When you're growing at 200%, that is definitely nothing to argue about. A little bit more risky on the scale. It wasn't a massive position when I got in, but now that's a double. It's starting to become a little bit of a sizable position for me. But trying to be patient here, trying to continue to observe the markets, find like the next leading theme in the market. That clearly it's neo clouds right now, which is great because I already have leg in that one. Fastly is a stock that I invested in when it was around $19. That's more in the edge computing, basically bringing that edge computing to the local layer, the edge layer. There's also OSS, one-stop shop. I know a lot of you guys heard about that from Stock Talk as well. I did buy in that one, a very small position. I would like to size it up. Actually, that's below where I bought in at 1%. So I might consider sizing this position up. But still a choppy market. And I did recently enter MRVL Technology around where it's trading right now. A much bigger position around 6%, but I'm setting a tighter stop loss there because I don't want this thing to like get too deep red in me. But that's also in the optical play for semiconductors as well. I did discuss this in a previous podcast a couple of days ago where I was talking about the whole semiconductor sector when it comes to optical. So there is Ethernet, which is copper, which is using basic electricity to travel through wire in order to reach an end-to-end channel for a lot of the semiconductor communication, the clusters, the GPU clusters, and so on. And copper is not as efficient as light or optical, right? So light is the fastest form of travel that we have today. And that certainly does travel faster. It's also a lot more efficient because then there's less electricity involved. We're talking about a light there. The thing is that the infrastructure for optical connectivity needs to be redone for a lot of infrastructure in data centers. And I think we are certainly heading that way when it comes to it. It definitely is a capable trend in the stock market. So that's why you see a lot of these stocks like AAIO, as well as Light, Coherent, and all these companies. Like that's why they're catching a bid because this is like the leading sector in the semiconductor portion of the market. And like these things are really what helps you outperform your portfolio when you find these trends before they actually happen and you get in early, you just ride the wave on it. So yeah, man, OSS baby. What's going on, Matt Sandberg? How are you? I do want to bring Stock Talk on here, but he's moving a lot and everything, and he goes in AMAT a few times. So I don't want to I talk to him all the time in the stocks and spaces. He's always on there all the time. So, I talk to him on there and I chat with him on the side as well. But yeah, it'll be cool to have him sometime on here. The thing is that he already has an earnings edge with, I forget the name of that. Hold on a second. I forgot the name of that, the spaces that he does with AMAT here and there. He does do that one as well. So I don't want to saturate how much he's talking on there, but I would like to tap into his head as far as his background and everything goes. Cause I think that's understanding how people think when they outperform the market is a lot more important than just following their plays. Right. So teaching a man to fish, he's going to start teaching a man to fish is obviously more important than just giving a man to fish. I forgot what the statement is. Hold on. Teaching a man to fish, quote, give a man a fish and you feed him for a day, teach a man to fish and you feed him for a lifetime. Yeah, that's exactly what the quote is. Because if you teach someone how to be a good stock picker, then that means that they'll be able to do things of their own and be able to have sustainable portfolio growth over a long period of time. That's what you want to learn from these people. You don't want to learn what stocks are they doing? I'll just go buy it, right? Because if you do that, you're going to be completely dependent on their entries and exits. And he said many times that you're not going to be able to mirror his performance, right? So I've taken that along with, listening to Peter Lynch, Warren Buffett, and all these other legendary investors. And what I've been developing in my own experience in the stock market is that, look, back 5-6 years ago, yeah, I mean, you buy a stock and you hold on to it, but that's not the stock market today. Today, this is a stock picker's market. And if you catch these themes before they happen, then there's a lot of upside. You're talking about multi-baggers when a theme is just getting started. Nebius, for example, when I started buying this thing, I started buying it when it was $35 as it was going down. And April was the time to buy it. And then everyone started getting in later on. But that was before that entire neo cloud sector got appreciated, with your Nebiuses and IRENs and CRWVs and so on. CRWV was the only popular one out of all of them. And they all got decimated last April. And then all of a sudden, out of nowhere, Microsoft signs a contract, a $19 billion contract, up to $19 billion with Nebius. And then today you have the $2 billion investment for video. This is obviously gaining a lot of traction. I don't think this theme is done. I think there's going to be quite some time. Now, is this theme going to continue going straight up from here? I don't know. You've seen the volatility. Nebius was $150 just a few months ago. And then it's at 111. Yeah, but it was all the way down to $70. That was the time to add more to Nebius. So it's there are pullbacks to buy, but then there's also opportunities to buy before that blow up happens, right? The problem is right now is that there's such a narrow leadership in this market that it's not easy to find these themes, because as soon as anyone catches a hint of what that theme is, they bid that thing up like crazy. The optics trade is insane right now. The optics trade is wild, how crazy it's just moving. So anyways, I want to get into something. Maybe I'll do the market close real quick. Maybe I'll do the market close and then I'll sign off after that, just for a tradition. I'm going to go ahead and play this clip from Tom Lee. He did talk with CNBC yesterday. Don't laugh, guys. Tom Lee has done really good in the past. The problem is that he put all of his money, all of his eggs in one basket when he did BMNR, and that didn't work out for him. And that is the last thing people are probably going to remember for him, unfortunately. But he has been really good with how he shows his strategy. But let's check out this clip from CNBC. He did this at Future Proof.
A fun strat. The co-founder, chief strategist, joins us now here at Future Proof. You're a brave soul wearing a suit and tie here on the beach, but it's how you roll, Tom.
Yeah,
welcome.
I guess that's being a contrarian, right, Scott?
Yeah. Well, I tell you, you sort of are. Now, you're not negative on stocks, but you do have a base case that at some point this year we're going to go down 20%, that we're going to have a bear market. Was this the first whiff of that?
You know, our take is we do expect that decline to happen when markets don't respond to good news. So I think we're in a period where we had a bear market already in software, the Mag 7, and in crypto. I think that's already taken out a lot of speculation. So to me, I think our bet would be markets are actually going to lift through the end of the month, that we're going to actually be positive for March and maybe hit 7,300. Later in the year is when we think a bear market might show itself.
What about oil, right? We're watching it so closely. We're driven by headlines, some of which are apparently erroneous. I don't know what do you do with that?
Yeah, I mean, it's a very confusing time. I think it's very difficult if someone's trying to trade both the headlines or trade oil. But if I look back at the last 2 days, oil's $15 higher than it was last week, but the S&P's higher. So to me, the market actually is handling higher oil prices better. And, you know, we wrote in our note this morning that we think higher oil prices are actually good for the U.S. stock market.
Yeah, see, I think that's going to be a really hard sell for people who are watching this program, like trying almost too hard to paint some bullish scenario. How in the world are higher oil prices, which then mean even higher gas prices, which mean higher jet fuel prices, and all sorts of other issues that are related to that, input costs on a whole number of other industries, how is that possibly good for the stock market?
Yeah, part of it's a relative. You know, one, U.S. is an exporter of oil, so we net benefit as an economy from higher oil. The second is other countries are importers, so the U.S. not only looks better, but on a relative growth basis, it should outperform, which means flows back into the U.S. And the third is, as we worry about global growth for all the reasons you described, when growth is scarce, people buy growth stocks. The U.S. stock market is a growth index, so it's coming out of the rest of the world back into the U.S. So I think it's a rotation story.
All right, speaking of growth stocks, tech has been up for debate, certain parts of it more than others. We're going to get Oracle earnings after the bell tonight. You told me earlier this morning on the stage there on the beach that you think software's bottomed.
Yeah.
Why?
Well, I think software has bottomed because we tend to price in the negative risks early, which I think's happened, and we've seen the multiples come in. You know, the IGV, which is the software ETF index, has lost 5 multiple points. Now the forward PE is 16 times. So to me, you're trading this like a cyclical industry now, and I think out of that universe of 110 stocks, many actually have durable businesses. So I think you're getting paid to buy it here at 16 times.
What about the broadening trade? Where does that stand? Now, again, if we're talking about, you make the statement that higher oil prices are actually okay, or if not better for the stock market. Doesn't the broadening trade have an issue with that? I mean, if you start worrying about the impact of higher oil prices on the economy itself, how does the broadening trade work?
I think it's a good question. And we do have to remember there's the stock market and it's not always the economy. So I think the U.S. economy is going to have some risks for the reasons you described, which is why I think growth stocks start to look better, which is a lot of tech. And again, the U.S. is a growth index. I'd probably lean towards growth stocks outperform, which is not necessarily a broadening trade.
Let's finish with a quick one on Bitcoin, because I think it hasn't traded like many had suspected it would at times of turmoil in the market. It wasn't a safe haven play. It wasn't digital gold, so to speak. I mean, gold was gold, and gold traded well. So where does Bitcoin go from here? Is your confidence in it in any way shaken?
It's not. I mean, Bitcoin did basically break on October 10th because that was the biggest deleveraging event in the history of crypto. When gold went up, Bitcoin went down. But I think we have gone through a winter where a lot of the speculation and the leverage is gone. And I think this weekend kind of showed Bitcoin is coming back in vogue as a store of value because oil prices went up, but over the weekend, crypto prices actually surged, and Bitcoin, as you know, is holding above 70,000 now.
Yeah, I agree with him at that. There was a lot of massive over leverage when it came to crypto, and we got that unwinding of the leverage. I don't know if this is the crypto winter that people think it is. I do think that if there is a crypto winter, we will know for sure. And crypto winter would last for more than just a few months. Crypto winter would last for years, maybe like a year or two at least. But we are definitely still in the bull market. Could it just be a deleveraging event? We're starting to see here on the close, and I got something cool to play for you guys when the market does close. You guys probably know what it is. Qs are flat into the close. Let me go to the 15-minute chart here. I'm going to take away these indicators. Yeah, so we're looking like over here that the Qs are basically flat. IWM was down 25 basis points. IGV got green on the day. That's interesting. How are the software stocks doing? They still look like shite. So still not looking good. We'll see if they bounce back tomorrow. ServiceNow is at 115 bucks. So good for ServiceNow. That's good. It's coming back a little bit. So we do have a little bit of coming back toward the close. SOX is up about 1% today. SPY is down about 14 basis points. Yeah, basically flat. I think the market is kind of waiting for some development on this war situation that's happening here. So we will continue to wait and see. How much time do we actually have left until here we go. We got 2 minutes left till the stock market closes. All right. So as far as that goes, commodities, crude oil is up 5% today. Nat gas is up about 5% today. I wonder how Next is doing. Oh, Next is up 3%. VG probably bounced today as well. Yeah, VG. Wow, 10% move in VG. That's good to see. Copper is down today. Gold is down today. Silver is down. Silver is down 4% today. Interesting. Yeah, that thing kind of pulled back a little bit there. Yeah, appreciate you being here, man. Thank you. Let's go. I'm sure he's doing something very busy right now. Is Path earnings today? Wow. All right, let's hope that guy Jake comes back. That'd be very interesting if the guy comes back from the dead, because this stock took a pounding. This stock definitely took a pounding for quite some time. All right, I got 1 minute left till the stock market closes. Yeah, I remember this thing had their earnings. This is a wild move. I should have sold here. I didn't. I ended up selling like around 15 bucks, unfortunately, but I probably will not get back in this one. I very likely will not get back in. And, you know, if it goes up, congratulations to Jake and anyone who's holding. But I do believe that they report earnings today. We got 55 seconds until the stock market closes. And I want to share this screen real quick. Just take a look at some earnings here. We got 45 seconds. Yeah, so we have UiPath reporting earnings, Bumble, OPTT. Ooh, this is that drone company or the submarine company. Petco reports. Petco is still public? Wow. Yeah, not really a whole lot. All right, 25 seconds till the stock market close. Of course, for tradition, I will do the bell ringing, but not me personally. Going to be your boy Amit doing the bell ring for you. We got about 12 seconds left over here. The stock market closes, and I will commemorate it right now.
All right, Tuesday, March 10th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right.
Yeah. So for tradition, of course, wasn't that bell supposed to be quieter? Maybe you switched the bell back. I missed the last few market closes. Yeah, let's take a look at some of these earnings over here. I'm going to open up the chart for the earnings. Let's see what's happening here. I'm only going to be here for like about 15 minutes. Not going to be here for the whole thing. I'm definitely not going to be doing the, oh, wow. Oracle closed up 10% today. Nice. AOI. All right. ServiceNow. So we have Path, OPTT, but I think this is, oh no, that's not OTC. Okay. You'll be able to see that. That's a wild move, man. This thing is like an $84 million market cap. Like, holy cow. Good luck if you're playing this one, because you can get the rug pulled from underneath you. This is just super risky being in this one. I mean, you know, hopefully it turns out well for you guys. Whoa. Qs are down 10 basis points after hours. Did something happen? No, just a bunch of after hours action. Nothing really happening here. So we have Path reporting after hours. What else is on my list? Bumble, BMBL. Anyone shorting Bumble? Is anyone here shorting Bumble? Stitch Fix. Stitch Fix is still public? How are these companies still around? I don't even know what any of these companies are, to be honest. These are a lot of companies I never even heard of. Dude, what? What is this? I was just looking at the avatar for a company here. ODC? They're reporting earnings today. I want to show you guys. Why does Earnings Hub have this as ODC? Like, what is this? I'll go to the calendar real quick. What, guys, what is this? I can't zoom in. Where's ODC? No, that's Tuesday. I can't zoom out. I'm trying to show you guys this symbol over here. Like what is this, guys? Their company logo, or at least on Earnings Hub, is like a dude tripping on oil. And apparently they're reporting earnings today. So we'll see how they do. Maybe they'll give it a little bit of a bid off that one. Maybe the stock is going to slip. I don't know what they're trying to say there, but that'd be pretty interesting. All right. So let me bring up the charts again. Over here, we got 433 people over here. Thank you for watching, guys. If you're on the Twitter, of course, go ahead and check us out in the YouTube channel, Wolf Financial. 89 people on there, 344 on my channel. Appreciate you guys being here. Yeah, I don't understand why they have that logo on there. It's very odd. Oh, no, I was trying to see Nebius. Nebius closed at 112. Wow, that's crazy. FEIM reported down 10%. Electronic telecommunications company, market cap is less than $1 billion. That's a small cap, a micro cap, actually. Interesting. Did Path report? No, Path didn't report yet. At least I don't see it in the after hours over here, but they got quite a bit into the close. Holy cow. In the last hour, they rallied like 5%. Oh, they already out? There you go. Up about 1% after hours. Let's see if I can find the numbers here. I don't have the numbers yet on my side. Let's see if we got some Path numbers on here. Oh, there's someone who's going to be doing this stream. It's definitely going to be Jake. Dude lost $8 million in a matter of a few months. So hopefully I don't like to wish bad upon people. I hope he makes that money back, because that would be like really cool if he earned it. All right. So Path earnings revenue came in at $467.4 million, 10% growth year over year. ARR $1.85 billion. Non-GAAP operating income, $142 million, 30% non-GAAP EBIT margin, or adjusted EBIT margin. GAAP profitability still, net retention 107%. Nice. That's good stuff right there. Let's see how that stock performs. Oh, wow. Petco is up 10% after hours. Let's see what WOOF. I don't see any numbers for Petco yet, but that thing is ripping after hours. Bumble is up 10% after hours as well. Path is basically flat after hours. We still need to see what's going to happen with that one. WOOF. Do I have any numbers? WOOF. All right. WOOF. I got the WOOF numbers. I got the Petco numbers. Net sales, $1.5 billion, decreased 2.4% year over year. Dude, Petco makes $1.5 billion in a quarter? What in the world? Now that, I did not know. I did not know Petco was making that much money. Their market cap is $680 million, and they made $1.5 billion last quarter? No. No way. Net sales for the whole year was $6 billion. Flat. You're a $6 billion company, revenue, and you're less than $1 billion. Am I missing something here? Come on. Cash grew 91 million to 256 million after voluntarily paying down 95. Oh, they paid down their debt profile. I wonder if Chris Patel is looking at this one. Free cash flow, $187 million to increase of $137 million. Oh, wow. Free cash flow went up. All right. Fiscal year 2026 outlook for Petco. Flat, 1.5% year-over-year growth. Okay. So they're going to be growing next year. That's good. They're closing 15 to 20 stores. So they're decreasing their expenses. Adjusted EBITDA, $415 to $430 million. Petco is up 16% after hours. Q1 outlook expected to drop 1% year over year, $92 to $94 million adjusted EBITDA. Wild. Who would have thought Petco was a place to be? It's crazy. All right. Bumble up 13%. Is this the one Hamid is in? I'm going to take a look at Hamid's fiscal AI since he shares it for free. Netscope reported earnings today too. I did not know about that. NTSK. Netscope is down 14%. Interesting. Wow. What? Petco is up 20%. Good Lord, guys. Who would have ever thought Petco was a place to be today? Pets. I don't see Bumble on here. All right. So Bumble reported earnings. Oh, wow. They're up 18%. Guys, this is like the opposite of what I thought it was going to be. You have basically your software and over here flat to down after hours. And you have Petco and Bumble ripping up almost 20%, both of them. Bumble just reported Q4 earnings, $224 million versus $221 million estimate. EPS came in at minus 4 cents, $4, not minus 4 cents. Net income minus $600 million. So they lost more money than their market cap is worth. Adjusted EBITDA, $71 million. Next quarter, they expect a sequential revenue shrinking. I don't know why the stock is up after hours. They beat the estimates, but like this does not look like it's a good earnings. But I don't know, maybe Wall Street was bearish this company and now they're not. So they're diving into it. $320 million market cap. All right, guys, I need to confirm if this market cap is actually right. I'm going to confirm on my end over here. Yeah, they're $420 million market cap. What about WOOF? $500 million market cap, $650 million market. Dude, these are like very small companies apparently, and Petco is making $6 billion this year. Crazy. Who would have guessed these are the places to be this year? Oh, look at that. Path made to move 4% up. Nice. CrowdStrike and Perplexity partner deliver enhanced security for Comet Enterprise. Oh, that's interesting news. Let's see here. Wow. Okay. Path is up 5%. I hope Jakey Poo makes his money back. Hopefully he makes his money back. All right. So I'm just going to check out something real quick here on the side. Wow. Getting some nice after hours move on Path right here. It's at almost $13 now. All right. So that is an interesting close. Giving a little bit back there. Netscope is now down 12%. Wow. Netscope is down a lot. What do they? Netscope revenue came in at $188 to $190 million. They they beat EPS and they beat the top line growth, but maybe it's their outlook. Looks like it might have been their outlook because next quarter they're going to lose more money. Yeah, that's probably it. Down almost 20%. That's crazy. Well, let's see if these gains hold. I hope some of you guys own some Bumble or own some Petco. Like, good Lord. Jake is that dude who had like a $10 million bet on Path. I don't know if you saw. Let me see if I can bring up his Twitter. Oh, he's actually live right now. You know what? I'd like to talk to that guy. See how he's feeling. I mean, he obviously is still bullish. This is the guy, and then this is his. This is a tweet that he had. Oh, he didn't quote tweet it recently, where he basically showed how much he's down. He had like a tweet where it was like his account was down like 80% in the last few months. And that's like $8 million. Just crazy. I don't know how someone can stomach that. I mean, kudos to him if he can stomach that. And again, I don't like to talk crap about people, guys. So you're not going to get any shite talking in this channel. You know, I like to look at the positive side of things, look at the positive side of people, be optimistic for people. I don't think anyone deserves to be put down because of decisions that they made, because we've all made bad decisions in life. And, you know, this one, obviously, he was not happy about. Oh, he actually got green on his path position over here. But where was that? I'm trying to look for that tweet over here where he like shows a screenshot of being down. Yeah, this is the one. Yeah, 73% down. It's crazy. He was down like $8 million. Whew, brutal. But path is flat after hours, so we'll see if that one comes back. As far, you know, if I recall, he manages money for people. And he had a lot of leverage on. He had a lot of margin on. He didn't play options, but he had a lot of margin on. So he's made a lot of money off Lemonade. I actually was outsourcing some of my research to him when I started looking at Lemonade, and then I looked into it and I got bullish in Lemonade. I'm no longer in Lemonade anymore. I got out at $75, but I got in I think like sub $30. But yeah, no, that was a different time just a couple of weeks ago when the market was bullish. All these AI stocks and stuff, all these growth stocks, but now it's a different market. So glad I got out of that one. But he is very bullish on Path. Path is up 2% right now. So it is coming back. Pretty volatile stock. Someone said over there 25% short float. So yeah, that's thoughts on quantum longs. QPUX. Ooh, I got to bounce in 1 minute, guys. So I'm going to close this out soon. Now, I have no thoughts on quantum. I'm cool with quantum. I don't think it's time yet. All right, guys. So thank you for watching this one. Really appreciate you guys being here. All 400 plus you. Really appreciate you guys. Again, you know, always bring you the news every single day. I start streaming around 2:45 p.m. Hopefully Amit's back tomorrow. Next week, I think he might be at GTC. So I'm probably going to do a few market closes next week. So it'll be very interesting to do. Maybe the market open. That would be quite early for me. It'd be 5:30 a.m. But guys, really appreciate you guys tuning in here. Sponsor this video is public.com. Go ahead and check out public.com. The tweet is in, or the post or the promo code is in the description there. If you guys want to check that out, by all means, check it out if you want to. If not, all good. But I really appreciate you guys tuning in. Thanks for coming. And hopefully we get some good news about this war ending soon, because it's straining a little bit in the economy. And I don't want to get political or anything, but, you know, there's a lot of people who are dying out there that don't want to be involved in the war, unfortunately. So prayers out there to people who are dying on both sides, and salute to all those soldiers out there. Right. Thank you.